What's going on, guys? It's Stock Picks by Tim. In today's video, I'm going to look over a couple of charts here, and we're going to look over a potential Santa rally or not. There are some chart indications and some potential levels that need to be broken if we are going to see a Santa rally. And the chart's not the only thing. We also have some catalysts coming up that I'm going to get into that could completely change the trajectory for better or for worse. Now, if you like these videos, don't forget to like, subscribe, hit the notification bell, and let's check this out. Now, we do have an event here coming up just a little over a week from now, and this is going to be the FOMC meeting, and this will take place December 13 and 14, and this is when November's CPI data is scheduled to be released. And of course, we're also going to have the rate hike decision. Now, investors are anticipating a lower rate hike, but the keyword is still rate hikes. But it's definitely encouraging to see that they are going in a little less aggressively. At some point in the future, we will see just at 25, and then hopefully just no more raises. Eventually, we'll just stay where we're at. Hopefully, the inflation will come down with these high rates that we're already at and a little bit higher, maybe another percentage, 2 percentage points. But I do think that it's definitely playing a major role in the price of items. I've been seeing specifically around me, food's going down in price a little bit. I've seen gas lower a little bit. And of course, the housing market has been coming down with these high rates that people can't afford. So while short term, the macro is still bad, the Fed's still raising rates, we are getting towards the end of this long, dark tunnel. But we're not through it yet. We've still got some curves along the way. But remember, the stock market is forward looking. And I could argue that by the time the Fed is done raising rates, the market will already be on recovery mode. Because we know what comes after they're done raising rates. Once they're satisfied with where inflation is, they will get back to lowering rates. Not significantly, but they will be lowering it, which will be a relief to the stock market, and I will be there for that. But let's look over the chart. I did want to show you some things on the chart that could kind of give you an idea if we can see a Santa rally or not. Now, first off, the SPY, the S&P 500. Now, what do you see? Since 2021, December, we have been on a downtrend. But more specifically, what do you see closer? Well, we tried to break out of our resistance here. We couldn't. Now we are testing our ascending support. Now, this ascending channel we have been trading in for about a month and a half. We could break this and start coming back down, rejecting a potential Santa rally. We already did find resistance here. If we bounce on this ascending support and we do break out of this resistance, we could see a little Santa rally, and some good CPI numbers and a good Fed meeting could continue to push that and give us a positive effect. Now, those catalysts that I mentioned in the middle of the month, they're unpredictable. It could come out good, it could come out bad, and no one has the answer of what it's going to be. We'll just have to cross that road when we get to it. But let's take a look at another stock, more specifically NVDA. This one, similar to the SPY, has been on a downtrend since late 2021. And similar to the SPY, it did reach its resistance here and is starting to pull back. Now, it is attempting to bounce off of its 200 EMA, but if it fails this, it's likely it can fall further. And on the chart, you definitely want to add this ascending support. If we break this, we're going to probably fall. And these could be great hedges. If you're too bullish in the market, you don't have any bearish bets, these on a break of support could be a great potential hedge just to make some short-term money in the meantime. Now, I did want to pull up a chart that's doing something completely different, and this is a 6.5% weighting of the SPY. This is Apple. Now, it is starting to consolidate. We are getting this tightening up. We're getting this pennant here, and a direction will be chosen very soon. And funny enough, the end of this pattern is right around 14th of December, right at the Fed meeting. We may get a break to the upside. This may push the SPY a little bit because it does play some effect to the SPY, being that it's 6.5% of the weight. Now, if it breaks to the downside, it could confirm that the SPY is heading down. So that's definitely something you want to look out for. I would be watching the SPY. I would be watching Apple. You can watch some more smaller specific stocks like NVDA or whatever you choose to. Place bets on those, bearish bets, bullish bets. Now, I don't have a crystal ball, of course, but what I would say is I think we are going to break this and we are probably going to pull back a little bit. We have been seeing a nice positive push since early October, going from about 350 to nearly 400 before losing a bit of our steam. So we will see if we start coming back down and testing our low here of 345, 46. I personally, short term, remain a bit bearish. However, long term, I'm a believer. And I think a lot of these companies you're going to be missing out on if you don't buy now, even knowing that they could go down 5, 10, 20% more, or maybe more than that. But you have to consider how much some of these indexes and how much some of these companies have dropped. Is the SPY going to be around in 10 years? It's the index. Of course it's going to be around. Why wouldn't you want to buy it now? You could argue, sure, I could buy it at 350. I could maybe buy it in the low 300s. But that doesn't change the fact that, at least in my opinion, over the long term, 400, even 450 would have been a great time to add looking back. Now, I'm zoomed out just to kind of give you a clear picture of what I mean. You might think it was a bad time to buy the peak. Here's a peak here, 2007, 2008. We had our recession. What happened? It recovered. It eventually recovered. Broke that previous high. Another high here in 2015. had a bad year in 2016, came back around at the end of 2016, broke that previous high. Here's pre-2020, we have broke that high. Some are arguing that we will come down and test it, and that's definitely another debate to be had. But I do believe that over time, we will look back at this peak, at this $480 peak, and soon there will be a new high made on top of that. That's just the market. It has its ebbs, it has its flows, it has its bearish times, it has its bullish times. History has shown us that if you buy during the bullish times, you will be rewarded. You just have to be patient. But I'll step off my soapbox for now. Thanks as always, guys, for watching. If you got something useful, don't forget to like, subscribe, hit the notification bell, and check out the links down below for some free stocks and free cryptos. Appreciate you as always, and take it easy.